Welcome back to the Landlord Profitability Playbook podcast. I'm Chris McAllister with Roost Real Estate Company, and I'm joined today by my podcast partner, Laci LeBlanc. Good morning, Laci.
Good morning, Chris.
Well, today I want to talk about investor seasons. So, real estate investing moves in seasons or cycles, but it never ever moves in a straight line. And I want to kind of talk about how to read the market at a macro level today and how to think about seasons past, the present season, and seasons yet to come. And all of that I want to wrap up with the overall theme of how investors who really do make a lot of money in real estate do so by working with the seasons and never against the seasons. So it seems like that's a lot to cover today, but it's been on my mind a lot the past couple of months.
Well, I think it's big, it's huge if you're an investor, because otherwise, what happens, and we can talk about the ideal, right? If you do what you're supposed to do, then and work with the seasons. But what most people are probably experiencing is not working with the seasons, and then you have everything come at you at once. You get burnt out. So in the off season, if there is such a thing, then you don't do the things that you could be doing to prepare for the next busy season because you're so burnt out from the previous one. So I think it's if we're looking to automate your rent collection and get on with your life, as we say, then this is really the most basic step you have to take to do that.
Yeah, it sort of does touch on everything that we do as real estate investors and definitely everything we do. And I think it's been on my mind the past, well, maybe even more than a couple of months, is that, you know, we have owners that, have several properties and they're very successful. And when we ask them, what's the one thing that we could do to help you, you know, get to your next set of goals and so forth, the one thing that consistently comes up, the one answer we hear over and over again is, I'd love to buy more properties. And it's frustrating for the investors and it's frustrating for us right now because the great deals or even the good deals have been few and far between the past few months. So it got me thinking, well, when you're in these fallow seasons or winter seasons or neutral seasons, how should you think about them? And more than that, what can you do to, maximize whatever season you're in? Does that make any sense?
Yeah, it does. I hadn't even honestly considered that. I was thinking more about, the way we think about it in real estate in general, which is there's a busier season, but this is different. If you think about kind of your bigger goals, and buying property and really just being prepared when that comes, like it sounds to me like when that opportunity comes, you have to be ready. So, doing the work in those, winter seasons, like you said, is the only way to do that.
But you also have to be ready for the slower seasons, and that's where I think it's easy to get distracted from taking the long view. And when it comes back to buying opportunities, I mean, they don't come in a steady stream. They often do come in waves, however. And there are years and multiple years in a row, when good deals are everywhere, but there's also years like we have now where deals just tend not to pencil out at all. They just don't make sense. And a lot of times seasons change slowly, or at least it feels like they change slowly. And other times, something happens dramatic in the, broader economy and the season shifts overnight. But the problem is you can't just look at a calendar and know, when they'll begin or end. Last weekend was, the fall started, right? This past Sunday, and we know that's coming on the calendar. We know winter's coming. We know spring is coming. The real estate seasons, we don't know. So I like to think of it as there's three seasons, and they are the buying season, the neutral season, and the seller season. I know that's not terribly creative, but but it is what it is. And with the buyer season, this is the one, every investor waits for, right? You make your money when you buy. And a true buying season is when multiple conditions align in your favor, right? The prices are good, sellers are motivated, financing is available and it feels like it's, fairly priced. And in these moments, you can lose a lot of money by hesitating, right? If you can't recognize the fact that you're in a buyer season and you're not prepared to act quickly, somebody else will, and you're going to get left behind. So the best investors move quickly. They get creative with the terms. They make sure their financing is lined up, before everybody else, and they are set up to really strike while the iron is hot, so to speak.
Do you think that the buying season is more challenging now than it was 5 years ago, 10 years ago, 15 years ago? Because people have access to so many tools, technology mainly. Do you think it's more competitive? What do you think the difference is, and what's changing in that buying season that investors should be prepared for?
Well, I would argue that we're not in a buyer season right now. So my concern is for folks that are out there trying to put deals together because they think that's what they're supposed to do as real estate investors, right? So, it's, I guess my message is, or what I've been really, struggling to get clear on in my own mind is, what do you do, to maximize your portfolio? What do you do to get ready in these times when the deals are few and far between? Now, even in a buying season, and I would argue that, we haven't had a buying frenzy since, well, the crash in 2009, and then there was a buying frenzy, during COVID. But it was a different kind of frenzy because people were, pushing hard to buy houses that were clearly at the top of the market and at prices in many, ways that didn't make sense. But the key is, in a buying season, and maybe COVID's the best example, it doesn't mean that you just jump out there and grab everything in sight, right? Smart investors, the ones that are in it for the long term, they really think about the property, they do the math, they work the numbers. Another term for that is they underwrite their deals, and they do it very, very cautiously. And they run worst case scenarios, right? They stress test, what could happen, what's the best thing that could happen, what's the worst thing that could happen, what's the likely scenario. And they even think about, how am I going to exit this property? What am I going to do over time to make sure I can maximize the appreciation? The point is that during the buying season, they are incredibly discerning, and they don't get caught up in the frenzy. The buying seasons are a gift, and they don't last forever. So yes, on the one hand, you've got to be prepared to act fast, but on the other hand, you don't want to act rashly. And sadly, I think a lot of the folks that are trying to sell their investment properties right now, especially in hot places like Columbus, are doing so because they really didn't think it through, or didn't have all the facts available to them when they picked up these properties.
So, go with your gut. We hear a lot, but it's not just about gut instinct. That's up to an
No, you got to
outsider.
know some math. You got to do a little arithmetic, right? So you got the buying season, and then you've got the neutral season. So in the neutral season, deals are out there, but only if you control the value creation, right? So if you're paying market price and you're simply hoping that rents are going to go up, or you're not investing. I mean, at worst, I guess you're gambling, right? It's not necessarily a bad thing to pay market price if it fits in with your over if that property fits within your overall portfolio strategy. But as a wise man once said, hope that rents are going to go up is not a strategy. Hope is never a strategy. The way that you win in a neutral market is that you're able to buy and force appreciation, right? You're able to manage the appreciation, and you do that through, renovations, whether that's bringing them up to the neighborhood standard. If you're fortunate enough to buy a house that has some upside to it, maybe it's repositioning what you're doing with the property. Maybe it's a refinancing, or maybe you're buying the property because it's in your neighborhood, right? A lot of us try to buy properties in one section of town, one block, and so forth. And even in a neutral season or a selling season, if that one special property that you've had your eye on for quite some time comes on the market, you're gonna still do your math. You're gonna make sure it pencils out, but maybe you'll make a deal for that property that you wouldn't make for a property, say on the other side of town.
Yeah, that makes complete sense.
Like for instance, I bought a property in Florida, I guess it was 2022. And the reason I bought it was down the street from the house we already had in Florida, and I already had a tenant in place. So yes, I do feel like I overpaid for the property. I wasn't too thrilled with the interest rate, but at the time, it made sense for what I needed to make happen within my investment strategy, within my goals, and with my portfolio. I had a similar situation when I bought the building where our office is in Springfield. It was in 2017. So, the best part of, if there is a best part, but there is for investors, the best part of the crash was behind us, right? In 2017, all that great stuff happened or bad stuff, happened between 2009 and 2014. So an opportunity came up to buy a building in 2017, and it was from a past client. It made perfect sense for where we were at the time. And, I made a decision to buy that property. And, fortunately, we're 8 years later, and, we've done some things to the property. The value has gone up. We were also able to buy that property next door. So we own a nice little block of real estate there. It's like playing, Monopoly, putting the little houses on the corner, so that made sense. Another reason sometimes, deals in the neutral make the season makes sense is when you're buying a property in support of your business or your other business, right? Maybe you're a real estate broker and buying a property, to support your agents makes sense. We're working with a client now in Columbus who has a really interesting office building that she has bought and been managing herself over the years, and she asked us to help out. But she has a building where she keeps her health business in there. It's a holistic health counseling business in there, and she has, over the years, she bought the building where she was renting, and over the past few years, she has filled it with other types of healthcare practitioners, right? So she bought a building to support how she makes her living, and then she was able to expand on that by bringing in other people who do work like her within the community of people that she, knows, works with, competes with, whatever, and she's built a wonderful little business for herself. So there are times and there are opportunities in these neutral seasons where it still makes sense to invest as long as you're doing it for, a valid reason within your investment strategy or with whatever your other entrepreneurial endeavors are.
Yeah, I think that this all sounds very formal to me, right? Like you need to be sitting down at your desk with a piece of paper and saying, okay, it's a buying season or it's not a buying season. What should I be doing right now? But I think that investors who have been doing this for a long time probably do a lot of this naturally because they've figured out maybe by trial and error what works and what doesn't. So we talk a lot about Nana on this podcast, and Nana has spent the last year or so reinvesting in her properties. So properties that needed upgraded floors and upgraded siding. And so she hasn't bought anything new, but she has spent some time and resources upgrading properties that have been, kind of the same for a long time to get them kind of back up to the neighborhood standard, to make them more appealing. And she's been able to charge a little bit more rent. Because of that.
Yeah.
So I feel like, and Nana doesn't have any of this, probably on paper planned out. She just thinks through it. So I think this is some investors who've been doing this a long time are going to feel like, oh, this is a normal, natural thing. But I don't think it comes naturally to everybody. I think you kind of have to learn probably through some mistakes if you don't
But
listen
yeah,
to this
and,
podcast
and
first, right?
and it helps to live a little bit too. You you almost need to get a few years in at it. And again, we talk all the time about taking the long view like Nana has, and I've got 25 years in this now, but when I started, I thought I had to just buy no matter what, X number of houses a year, no matter what, or, that's what successful investors do. And I learned the hard way that that's clearly not what Nana did, right? Let's put it that way.
Yeah, yeah. And I think that, my family is always on the lookout for a deal, right? That filtered down in our blood genetically from generation to generation. And so, just being poised for that deal and doing the right things in the meantime is how they've become so successful at this. And they didn't have anybody necessarily kind of educating them in the process. So, you know, I imagine there were lots of mistakes that they had to learn from when you say, live and learn, that's probably part of it. But because it has been such a long game, Nana doesn't have payments on most of her properties. She's just paying property taxes. And so it's really a good time for her to upgrade and invest.
So you've got the buyer season, you've got a neutral season, and then we've got the seller season. And seller seasons, I think, are the most dangerous for less than, let's say, seasoned investors, right? Seller seasons are seductive. Appreciation is hot. Suddenly your houses are worth a hell of a lot more on paper than they were, say, 5 years ago. There's buyers that are lined up. It's easy, and that sort of describes COVID, right? If you're on the buyer side in the seller season, you want to be very, very careful, and it's probably time to keep your money in your pocket. But the other thing I want to speak to is you've got to be very, very careful as an investor in the seller's season, because it may feel in the short term that selling off you know some of your properties, it makes sense to get a nice big payday and so forth. But the thing you have to ask yourself is, unless it's the end, right? And you're cashing out and you're going to go put your money someplace and hopefully live off the interest, I guess. That's one thing. But what we're seeing now are people who bought really good properties. They've already suffered through the hard part, right? Getting them fixed up, getting them rented with good tenants, and the desire, or the shiny object syndrome, right? To cash out and put money in their pocket because it looks like everybody else is making a killing. Man, that's hard, because when you're in a market like that, and you get that and you take that money, what do you do with it, right? There's no other deals available that are going to have the same rate of return. So seller seasons, they're seductive, but they can be dangerous, right? And if you've got cash in your pocket and it's a seller season, that's when people tend to overpay, they over leverage, they get themselves in a bad situation. But smart investors in a seller's market, they do something, they do it a little bit differently. They see it as an opportunity, not just to manage or cash out on a property and make a killing. Seller seasons are a fantastic opportunity to manage and upgrade and improve your portfolio, right? So a great, you know, a very intentional, successful investor will use this as a time to prune their portfolio, right? Maybe it makes sense to sell some underperforming assets, get out of some problem properties. Maybe it's time to do some 1031 exchanges. Maybe if it's not into another single family home, maybe it's into a small apartment building. Maybe it's time to, you know, consolidate or go ahead and move on from some single family homes into a more valuable asset that you're comfortable will appreciate over time. But again, it comes back to, it takes some thought. It takes some math, right? If that makes sense. But I have seen so many people, I just think they've been short-sighted. They've taken the big payday. It feels good in the moment, but I honestly don't know when the next buyer season is going to come around where they can actually deploy that capital. Is that making sense?
Yeah, it does. And I mean, it's really about asset management in the end, and it's not that much different. Asset management for an investor with a portfolio of properties is not very different than asset management for an individual or a family with a portfolio of financial accounts, right?
Yeah,
And the thing that I like to talk about is like my parents are at an age where they could downsize. They could sell their house for far more than they paid for it. They could take the big payday, but they've still got to have a place to live, right? So they have to go buy something else. And at this rate, right, where I live, buying a smaller property, like downsizing, is going to take most of their, profit from, because prices are high, right? It's not the
yeah.
market to do that in. And I don't think, obviously, if you're an investor, you're maybe not thinking about going to live in your property, you're going to keep your house, but the idea is not dissimilar, right? You have to think about it the same way. Is if I sell this off, then am I ever really going to get as good a deal on a similar property as I got on this one? What are my potential alternatives?
Yeah. Yeah, actually, when we finish today, I've got a call to make to one of our owners in Columbus, and she has, I think it's a couple of doubles and then a single family home. And I think she bought them all during um, COVID, and she's local. So it's not like she was, buying from California sight unseen or whatever. But there was one property that she bought that, over the past 4 or 5 years, for whatever reason, has just not worked out. It's been an aggravation. It's kept her awake at night, tough tenants, extra money than she had hoped for or planned for rehab and maintenance. And for her own peace of mind, you know, she wants to sell that property while she can get the best possible price she can. And she's being very thoughtful about it, right? You know, I don't know exactly what she's going to do with that money, but you know, it might make sense to put some of that back into the doubles to make sure she's maximizing the rent in the neighborhood. Maybe she's going to, you know, keep some of that cash set aside for the next buyer opportunity. But the point is, there are times when it makes sense to sell, but the best of us are very, very thoughtful about it. And when you think about these seasons, you know, right now, honestly, I believe that we're sort of in an extended neutral season. You know, we're almost in hibernation. You know, winter season is where very few acquisitions make sense. Now, that doesn't mean that there's nothing to do, like we've said. It just means that you've got to shift your strategy. You can maybe play a little defense. You improve what you have, and you get ready for, you know, the day when the season turns again.
Go with your gut, but do the math. That's what I'm hearing.
That's right. You know, keep an open mind, but you got to fall back on that spreadsheet. So how do you know, you know, objectively what season you're in, right? Laci, we're talking about gut feelings and so forth, and that's very, very valuable. But how do you really know objectively what's going on? And you know, my position is that you watch the dials, right? And there's three of them, and those three dials are price momentum, supply, and borrowing costs. So momentum is you know pretty obvious, right? Are property values rising? Are they flat, or are they falling? Right? So momentum in either direction sort of sets expectations. Rising prices make sellers confident and buyers cautious, or it should make buyers cautious. Falling prices do the opposite, right? Falling prices make sellers cautious and they make buyers, you know, very, very confident. It's not just the numbers in today at this moment in time. It's about which way they're going, of course, but it's also about how fast they're changing. And as an investor, you can't just look at the national headlines or, you know, listen to the podcasts or, you know, whatever your news source is. You got to look at local comps. You got to look at, you know, what the appraisals are coming back on, you know, what's actually closing, right? Not just in a market like Columbus or, you know, Indianapolis, whatever. You've got to look in, I guess the best term is submarkets. You got to get down to the neighborhood level. You got to get down to the street level. You got to get to the block level. You know, you don't make money in real estate by, you know, looking at the averages or figuring out what's happening in Columbus. It truly is block by block. And if you ignore the momentum, you know, you risk chasing deals at peak or freezing up when there actually is an opportunity. If things are fast moving down, it's probably not the time to, you know, be paying full price. If things are clearly on their way up and there's going to be multiple offers, then you better get, and it's a property that makes sense, you need to get in and make your best offer early and tie that property up. The
What I'm
second
hearing
dial,
what I'm hearing some of right now from folks who are calling in to ask about property management, to inquire about property management services. We've had several homeowners call in. Their properties had been on the market and they weren't getting the offers that they wanted for them. And so they've decided that they might want to rent the property instead. And, you know, we provide what we call a market rate rent report. And so, you know, Gretchen runs that and sends it back. And what I'm seeing, you know, in some scenarios is folks are wanting to charge more rent than is really viable for the area. And it's because their payments that they're making on those properties are high. Does this, and that would be an accidental landlord kind of situation, I feel like, but tell me how that like what role does this kind of price momentum in, you know, Central Ohio, Columbus, Dayton, those areas, like what does that look like? I'm looking for a practical example, I guess, to kind of illustrate this, just because it's a little bit of a abstract concept.
well, you know, I guess there are two ways to look at what's happening. You do have people that we work with who, you know, bought a home when interest rates were ridiculously low, and they don't want to give up that rate just on general principle, right? They made a good deal, but and they don't want to give it up. But for whatever reason, personal reasons, they need a different house. Either they're being transferred or, there's another baby on the way, whatever. So those folks, when they come to us about property management, it makes wonderful sense, right? As long as they can afford to get the mortgage on their next house, they've got a great interest rate, they can cash flow, they can have their tenant pay down the mortgage for them. That's a beautiful thing. Now, on the other side, I feel bad for folks that are in a situation where, and I don't think we're there as a rule yet, in any markets that we serve, but the same person who has to get a rent amount that's above market rate in order to make a mortgage, sadly, is the same person who can't sell their house for, what they owe on it and pay the selling fees. So, I feel bad for those people. They clearly bought at the top of the market, and they're having trouble getting an exit strategy that doesn't require bringing money to the closing table. Fortunately, I'm not seeing a lot of that. But I do have a concern that, there's probably some of that coming, which, you know, honestly is really looking ahead to the next season, right? which could be the next buyer season um, for investors. So, one person's gloom and doom is another person's opportunity. But back to these dials, right? So you got price momentum, and then you've got supply. So, economists track supply as months of inventory, but all you really need to ask yourself is who's in control? Is the buyer in control or is the seller in control? Who's got the leverage? If there's low supply, it means there's competition. It means there's multiple offers. Um, Sellers are getting everything they want. High supply means that the power shifts back to the buyers, and properties tend to stay on the market longer, and sellers get really, really fast. In the neutral seasons, supply tends to be balanced. It's when, selective investors can still find opportunity, but they've got to really be creative about it, and they got to know their numbers. Respecting the supply dial keeps you from getting blindsided by competition or missing chances to negotiate. And it still comes back to, the very, very best, most successful, wealthiest real estate investors among us are also the most patient. So you've got price momentum, you've got supply, and then the third dial is borrowing costs. So for most people, they think about a 30-year fixed rate mortgage, but for investors, it's more than that. It's the entire lending environment. It's the interest rates, it's underwriting standards. Is there money available to lend? A property that cash flows at a 5% mortgage rate may lose a ton of money at a 7% mortgage rate. And then you've got the situation where, sometimes the posted rate that the lenders advertise looks pretty good, but then you find that their loan standards or their internal rules, policies, and procedures are such that they don't pan out. They don't make sense for the investor as they dig deeper into the terms of that loan. That's
Like when
why
you're
we
looking
always
at the car commercials and they're like 0% financing for well-qualified buyers. And then that gets everybody to the lot thinking they're going to get their new, Nissan for 0%, but well-qualified buyers might not mean what you think it means. Is that
yeah.
similar?
Yeah, there's different penalties for early payoff, and there's a lot of different covenants, restrictions on some of these loans, and that's why I always suggest that people have relationships, be able to pick up the phone and talk to loan officers at multiple lending institutions, and one of the our partner right now, not right now, our partner that we refer all of our investors to is called Lending One, and they specialize in working strictly with real estate investors, and they're fantastic people. They lend private money and so forth. I would urge everybody to get in touch with them, even just to start to establish a relationship and understand how they work. But at the same time, I would also urge you to sound out, investigate local lenders in your community who work with investors, and just see what's available, and honestly go out there and make some friends. When that borrowing cost dial turns back in your favor, you want to be ready to act before it gets too late.
Does that change for people who are paying cash? And we can, we could debate the merits of
No,
paying
I
cash
don't.
versus using other people's money, but what changes about this for people who might be paying cash for their properties?
I, other than, giant institutional investors with, multiple people putting money into their funds, I don't really know or work with any investors that have unlimited cash to continue to build their portfolio when it makes sense. So I think that any investor who's been at it for quite some time is very judicious about using leverage, but they use leverage um, in support of building their portfolio and building their wealth. So nothing wrong with cash. And the best situation you could be is to be able to go in and buy the house with cash. But even the folks that are doing that, they're still coming back and then financing the property after the purchase, or possibly after they get it rented. So every dial matters, right? And there's no single one that defines a season. But when you have at least two dials that line up, then you can pretty well confidently, figure out which season you're in. And when all three of them align, the prices are right, supply is good, financing is in your favor, that's the buying season. And, that's what we all dream about. That's all we all, can't wait for the next one to roll around. But those times when all three dials align, it doesn't happen very often, but that's where fortunes are made. And that's exactly what happened after the crash between 2009 and 2014. And I worked with a ton of owners that, my God, they bought everything in sight, and they're set for life at this point. And I wish I would have had more money back then, or had a better understanding of what was happening back then, because in retrospect, I would have done a heck of a lot more. So the market we're in now, I feel like it's in hibernation, and as I said earlier, it's just a strange place where not a whole lot of deals make sense, not a lot happening. But the reason is because, yes, we still have some price appreciation, and yes, there's still some rent appreciation, but the velocity has just gone so far down, right? Prices are maybe going up, but they're going up incrementally. Rent prices may be going up, but they're going up incrementally. We're talking 2, 3, 4%. Everything has slowed down dramatically in the past few months. And yet, oddly, supply is still constrained out there, and the sellers are still in charge. And then, the third dial that's not exactly in our favor right now is that borrowing costs are still high. And that's why this winter season, this neutral season, feels a heck of a lot more like hibernation right now. And it's hard to say when that season is going to change, or when things are going to shake loose again. But the thing that I just want to stress is investors go bankrupt when they ignore the seasons, and they end up making deals for the sake of making deals, right? It feels like, I'm an investor. This is what I do. I quit my job. This is my full-time thing. If I'm not making deals, I don't know what I'm supposed to be doing. Well, I'm here to tell you there are times when it doesn't make sense to make a deal, and it never makes sense to make a deal for the sake of making a deal. But I will tell you that investors get rich, really rich, when they patiently are able to wait out the winter seasons and act with strength when spring comes.
And that's really in your head. A lot of that, right? Like just being able to be in the right mindset.
Yeah. Yeah, and like I said, it's frustrating for me, both as a broker, a manager, and an investor, that there's just been so little to get excited about. But I've done some really things I'm proud of with my portfolio, though, for the past few months, that we'll get into a little later, probably on the next episode. But anyway, before we kind of jump into um, some tactics, like what to do in the downtime, I still want to use this time that we have together today, Laci, to kind of go through the 6 mindsets that the best investors among us have. The guys and girls that went across multiple investment cycles. They just have mindsets that I certainly didn't have, when I first started buying real estate, almost 25 years ago. At the end of the day, the markets reward patience, they reward discipline, not just hustle. hustle only gets you so far. So I know I'm preaching today, so thanks for bearing with me, but there's 6 mindsets that I just want to touch on today before we close out. And the first one I call patience over FOMO, right? Patience over fear of missing out. In real estate, the fear of missing out is super real, right? When everyone else is buying, it feels like you need to grab something, anything, or you're going to get left behind. And that's how investors end up with properties that don't cash flow or tenants they can't manage. And we saw so much of that happen to people, during COVID and coming out of COVID. The best of us don't let FOMO drive us, right? They're perfectly comfortable sitting on the sidelines for years if the deals don't make sense. I have to tell you, some of the people I sold, I have one investor client that I think I probably sold close to 100 houses to them, coming out of the crash. And honestly, they haven't bought another property, since probably 2012, 2013. Now, they've done some other things outside of our area, larger investments and things like that. But as far as single family homes, they bought everything that came up for a good 5, 6 years or whatever, 4 or 5 years, and they haven't bought another one since. So, there's people that sit on the sidelines for a long time if it doesn't make sense. And now other folks are actively managing their portfolio. They reinvest in their existing properties, just like, Nana needs to upgrade the bathroom or she's going to do vinyl siding or add an air conditioner or whatever. They reinvest in their properties where there's an opportunity to get a better return based on the other properties in the neighborhood. They bank cash, they build relationships with lenders, and they understand that sometimes what feels like or looks like doing nothing is often the smartest and most profitable move they can make. And what I want to say to people who feel like they've got to do something, patience isn't the same as being lazy, right? Patience it's active discipline. And it takes some courage. You've got to be able to look at an opportunity and know if it fits or doesn't fit, and prepared to walk away. Let everybody else pile into those uh, properties that I don't wish anybody ill will, but if it looks like on paper, for your criteria that this is a bad move, don't buy it. It doesn't matter what anybody else does.
Yeah, they say comparison is the thief of joy, but I also think it's the thief of profit in a lot of cases. Just because
Yeah,
everybody else is doing it, right? Or if you're on social media and you see all these, like your algorithm, if you're an investor, probably includes lots of, investing related content. And you see people buying and flipping and renovating, or you see people doing all these things, and that can make you kind of compare yourself to those people. And that's that feeling, I think, grab something, grab anything while other people are to be busy, to be doing this. But really it's that patience, and that you have to hone in on your specific strategy, what you've
yeah,
decided your goals are in the end, and you have to stick to it. And I think it's a really important statement that you made about patience not being passive. It's not laziness, it's not a lack of anything. It's a very active discipline, you said. And I think that's a really good point is, when doing nothing is the best thing you could possibly do to reach your goals in the end, then I think that you have to look at it as doing something, not doing nothing.
yeah. And I still, you know, fall victim to the FOMO thing. I'll go to the gym, and every morning, one of those TVs, that you look at when you're on the treadmill has HGTV on it, and it's showing somebody renovating a house, and they, God knows when they filmed it, but they just bought this house, they renovated it, they made a killing. It's like, wow, there's got to be one of those out there for me. But you've got to have some of that. You just have to have the discipline to not fall prey to FOMO. So preparedness over luck. When the market finally turns, it looks like some investors just got lucky. They happen to have the cash ready, whatever. It wasn't luck, believe me. They were just prepared and they were able to move faster than everybody else. Again, you're in the off season. You want to build liquidity. You want to bank cash, right? You want to just save, 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 and be ready when the opportunity arises. Discipline over noise. Every cycle comes with noise. There's breathless headlines. So the end is here, right? We're never going to recover, or everything's great. There's noise, right? Whether it's headlines, the pundits, the neighbors, right? Neighbors boasting about how much their new Zestimate is, for their house. There's always something, whether it's doom and gloom or whether it's unbridled enthusiasm, but elite investors, they tune it out. They stick to their underwriting standards, they stick to their plan, they stick to their strategy. If a deal doesn't cash flow, they don't buy it. If a market or a neighborhood doesn't meet their criteria, they don't chase it. They're disciplined enough to say no far more often than they say yes. And honestly, fantastic portfolios are built on the back of hundreds of deals that they passed on, not the handful that they actually went through and closed on.
Yeah, those
The other
social media
mindset that,
posts and the news reports and none of that has your specific goals and your specific circumstances in mind. I think that's the really important thing, whether you're looking at, you know, losing weight and exercising more or buying rental properties, you know, what you see on the screen or what you hear around you, it doesn't include your specific circumstances. It doesn't take into account your specific goals, much like, you know, the point we talked about before, but that's what makes it noise.
yeah, exactly. The next mindset is adaptability over rigidity, right? Cycles don't just test patience, they test flexibility. Investors who thrive are the ones willing to pivot between roles, buyer or an operator or a seller, or a reinvestor, right? And by reinvestor, I mean somebody who's willing to put some money in their property in order to be able to increase the value of the asset and raise the rent. In one season, those who are adaptable, maybe they're buying, and the next, maybe they're upgrading existing units. In a seller's market, they're pruning their portfolio, getting rid of their underperformers. A lot of them aren't married to any one strategy or one asset class either. If a single family home doesn't make sense, maybe they'll look at a small multifamily or a mixed use building or something like that. So they're open to new opportunities, but they're not chasing shiny objects, right? Being flexible, being adaptable doesn't mean that you go off the range, right? You don't chase shiny objects. You stay true to your fundamentals by being open to different ways to apply them. Stewardship over speculation. Real estate rewards stewardship. And this is the boring stuff, everybody. Real estate rewards careful management. It rewards long-term vision and it rewards time, right? Steady compounding. Over time, things become more valuable. It's just just the wonderful fact of the world we live in that compounding exists. And if you have the patience to leverage it and make the most of it, that you can't help but make a heck of a lot of money over time. The best investors treat their portfolios like professional fund managers would. They reinvest in existing asset. Again, they prune weak performers. They focus on cash flow. They don't get distracted or seduced by quick flips or speculation. They play for decades. They don't just play for quarters. And at the end of the day, this mindset, this whole idea about stewardship over speculation, it turns, the idea of a landlord into a true asset manager. They're not just owning property, they're stewarding wealth. And I think that's a thing that I think most of us overlook when, we see or meet or learn about somebody who's been very successful in real estate.
Yeah, I don't think this is very unlike, again, a portfolio of financial assets versus, portfolio of rental properties. I do want to make the point that, this might not be everybody's particular skill set. I think that with a lot of experience, a landlord can certainly be an asset manager, but it's okay to go outside of yourself and, in my case, our family and have a second set of eyes, have another person look at your portfolio and give you some insights, that they see. Because once you've been like, you might be too close to it, right? Once you've had a lot of properties for a long time, you might not see month over month that there are some of them that are underperforming, or that there might be a better opportunity somewhere else. Or so I just feel like that, it's important to make the point that, not all landlords need to be their own asset manager, or they don't need to do it all alone. If you're with the right management company, if you're with the right, if you have a relationship with the right, agent, then you might be able to get some outside insights that could, propel you to that kind of next level. Maybe you don't have to
Yeah.
wait, 40 years like Nana to get there.
Okay, the last mindset I wanted to touch on today, I call conviction over fear. When the market finally shifts into a true buying season, fear is everywhere, right? Headlines scream about downturns, neighbor tell you you're crazy. Most people freeze because there's estimates dropping, right? For the house that they live in. But conviction, right? The courage of conviction is what separates the winners from the losers. The best investors act boldly when conditions are right. They trust their preparation, their relationships, they trust their math, and they move when others hesitate. History shows that the greatest returns are often made during moments of fear, and that's exactly what happened during the downturn after 2008. Conviction is what allows investors to buy when everybody else is selling, and more importantly, and this is the harder part, to hold steady when everybody else is panicking. So to wrap this up, that's really the framework that I want everybody to be thinking about. Real estate moves in seasons, and don't try to fight them. You read the three dials, that tells you what season you're in, and then you lean on the six mindsets that the very best and most successful real estate investors among us share to make the right moves. That's how smart investors avoid getting burned in a frenzy, and how they put themselves in a position to win big, when the opportunity comes around again. So next time we're going to do part two of this, and we're going to take it a step further. Instead of, mindsets and psychology, we're going to talk a lot more about the exact tactics that investors can use in lean markets. And we're going to talk about a strategy that I call the long burr. People who have been investing for a while, they've heard of the term, the burr method. We're going to touch on that, and then we're going to touch on my adaptation of that I call the long burr. And then the other thing I'm kind of excited about taking everybody through, I've done some research, and I've actually I can actually show and discuss every real estate season, and this is residential real estate season, that Columbus, Ohio has gone through over the last 30 years. So I want to talk about how these concepts of investor seasons have actually played out in our own backyard. So before we wrap up, Laci, did I miss anything today?
I don't think so. This was an excellent, I think, intro into what I'm really excited to talk with you about next time.
Okay.
We want to
Well,
see
before
I want the real life examples. I want the practical examples. It is, we talk about being touchy-feely sometimes, or we talk about kind of having these abstracts and these theories, and how that can feel woo-woo to to some folks, especially people who are in this day in and day out, right? But we can't ignore it. This is the fundamental foundation, right? This is the first step. This is the foundation of everything else that we're going to talk about when it comes to the actual strategies or tactics and the actual things you have to do, is all based on this, theory, this foundation.
No, I agree, but I guess it is theory, but I guess the takeaway for me, when I look back, is telling myself that patience is not laziness, right? I always feel like I've got to be doing something. There's got to be the next thing. I've got to be adding value, whether it's for myself or others. But sometimes there's the best thing to do is to sit tight, and that doesn't mean you're being lazy. But I guess that's another podcast about my Puritan work ethic and you know.
Yeah, I mean, we have to be clear that this is not theory in the way that it's like, oh, we've mapped it out in our brains and think it might work. This is reverse engineered from successful landlordship or property
Yeah,
ownership
yeah,
over the years, right? So when I say theory, I don't mean that. I just mean that,
yeah.
it's people don't want to talk about the ideas behind the actions, but
But
yeah,
it
no,
is
you're right.
emotional. It is
Yes.
emotional, and I think
I mean, these
sometimes
are the
it's
biggest
appropriate
investments of
to
your life. This is
give
your
people
wealth.
give people a moment to feel it, right? It goes back to the whole idea of your why. Why did you decide to invest in real estate to begin with? So, yes, but I know everybody loves the tactics, so we'll do that next time. But anyway, I just want to remind everybody before we wrap up, our goal at Roost Real Estate Company is to not just be your property manager. We see ourselves as true partners, and we want to help you manage. We want to be your asset manager, and we want to help you manage your entire portfolio. If you're a serious investor, it's about not just about collecting the rent checks. It's about protecting your capital, maximizing your return on investment, and making the right moves at the right time, regardless of the season that you're in, and that's where we come in. So we work with professional investors to manage not only the day-to-day operations, but also the big picture strategy, pruning underperformers, reinvesting in existing assets and positioning your portfolio to take advantage of the next buying season. So if you're ready to work with a team that treats your properties like an asset manager would, with a focus on growth, stewardship, and landlord profitability, please reach out to us at Roost Real Estate Company. We'd love to talk to you about how we can partner with you and help you reach your goals. So Laci, thanks so much. This has been fun, and we'll move on to part 2 next time.
See you next time.